Excited. Like for myself. Anyone else excited? I'm always excited, right? All right, Rainier's excited. I think Kaylee's a little excited. I can see Raphael's teeth. I
I
hope he's
am. I am
there.
excited.
You go. Okay, she needs to put her hand up because I know she's taking care of the baby. Love getting engagement, guys. If I can get some energy or feedback from you guys, it's always great. All right, let's get into today's subject. As I mentioned, today's going to be an incredible topic. Okay. Now, some of you guys are like, oh, it's RSPs. I think I've heard of this subject a couple of times. Now, I'm going to give you a few key nuggets on today's session that I think you're going to take away and you're going to be pretty impressed. You're going to be like, man, I wish I knew this earlier. Maybe, in the future sessions, we'll cover it again, but this is something that's really powerful that I'm going to share with you guys today. Okay. And for the folks who are doing financial seminars like Arti, Sheeny, you guys might want to integrate some of these ideas into your future PowerPoints, right? Which is going to be great. So let's start with the RSP subject. Now, why are we talking about RRSPs? Is because RSP season is right now, January 1st all the way till March 3rd. Okay. Typically it's March 1st, but they've extended a couple more days. What does that mean? That means you can invest in RSPs between these 2 months, January and February, or March until March 3rd, and you can get a tax deduction for what you've made last year, right? So this is incredible. A lot of people right now are probably scrambling around, worried about taxes. Maybe they're looking for a refund. Okay, a nice refund can probably offset some of the debt they incurred during the, holidays, right? A lot of people use their credit cards. I don't know, how many clients out there or some of you guys, right, probably went on a spending spree, started swiping the credit card, getting gifts for your kids or grandkids or cousins and nephews and nieces and aunts and uncles. And then all of a sudden you got this debt. Oh no, starting the new year off, it starts a little difficult. But what's nice about the RSP is that contributing in it can give you a little refund. And oftentimes, this refund can be really valuable because you can use it to pay off some of your high interest debts. Okay. So today's subject says a disciplined approach for clients and advisors, you for building wealth. Okay. It's not just for clients. I'm going to talk about how this is going to help agents, you guys, people who are getting licensed to build wealth. Okay. This is going to be incredible. So let's get right into it. What is our RSP? Well, we had multiple different trainings covering this, but I'm just going to give you quickly a few bullet points of what you want to probably look into or come onto the future RRSP training sessions. You can get more details about this. But it was created in 1957. It was to help Canadians save for retirement by offering a tax advantage savings plan, right? Right after the World War II, right, right after 1945, there was a lot of baby boom that happened, right? Baby boomers, we call it this, the segment of population right now that counts it's for baby boomers, 1/3 of our population today. These baby boomers were born between 1945 and about 50, 55, 56. So quite a bit of, babies that were born because a lot of people that went to war, right, in World War II came back, the soldiers, and then, right, they were able to reunite with their spouse. And then you probably know what happened next, right? They had a bunch of babies. So that's what we call it, the baby boomer era. So the RSP was created during that time because the government realized and forecast 50, 100 years ahead. And they're like, you know what? If all these babies are going to be born, how are they going to survive at retirement? Don't they need some sort of program or some sort of account that can really start saving money for their own retirement? Because they might not be able to self-sustain, right? If they don't do that, right? They're not going to ever stop working. So they need to start saving money. So they encourage people to start saving and they created this RRSP plan. Okay. One of the benefits of an RRSP is tax deductibility. Okay. You can reduce your income taxes. So I'll keep a simple example. Let's say last year someone made $100,000 salary and they put in $20,000, right? Now it's quite a bit of money, but I'm just giving you this for, just for numbers. 100,000 minus 20,000, that means they've declared, $80,000 now because the 20,000 gets deducted against your income. So putting money in an RSP reduces your taxable income. Now, someone might have paid $100,000 worth of like taxes on $100,000 worth of income, but when you file for income taxes this year, you tell the accountant, say, hey, you know what? I put 20,000 in my RSPs, so I should have actually been taxed on 80,000. Say, hey, give me my refund. That 20,000 that I pay taxes on, I want my refund on that. So that's what's going to happen. They're going to give you a check back or a refund back, which is great, right? Well, who doesn't want money back, right, from the government? tax deferred growth. While you have your money invested in an RSP, the nice thing is we have so many different investments that you can choose from that can generate you a lot of return, a lot of interest. And this interest, as your money is growing year after year, does not get taxed. So, which means that it's tax deferred. It grows all the way till whenever you're ready to withdraw the money. So it can really grow faster, right? So you don't pay any taxes as it's growing, which is great. You can also take money out or borrow money from this plan, right? The RSP plan for HBP, which is home buyers plan. A lot of people want to buy real estate, and today you can go up to $60,000. If your husband and wife, 60,000 each, which is a total of $120,000 for you to use for your first home purchase, which is incredible without having to pay any taxes because it's actually for the HBP. On the other hand, you can also do it for the LLP, which is the lifelong learning plan, right? This is for you to go back to school and you can go back to take any courses or education so you can upgrade your experience, right? Or skills so that you can go acquire maybe a better paying job. So these are conversations I think, as agents, we need to start having with our clients because clients don't know why they're doing their RSP. They simply know it's an account for our retirement. That's all, but they don't know that there's a tax deductible option. The money grows tax deferred. They can borrow this money for their first home purchase. They don't. They might have heard of it, but do they know the intricate details? Right? Those are things that you come in handy. Right? That's where you come in with the education. And there's a variety of investments. One of the other things that I always tell our team is that, guys, simply because someone has an RSP doesn't mean they know exactly how it works. So all those things I covered, the first 3 points, but more importantly, the last one, variety of investments. If I was to ask you guys a question here, let's see who can give me an answer. When you ask a client where their money is invested, how many clients do you think can tell you exactly where their money is invested? Anyone here had clients tell you like 10 out of 10, they knew exactly where their money is invested? Yes?
Very few.
Sorry? Can you
Very
repeat that?
few.
Sorry, I couldn't hear you. One more time. Oh, okay.
She
Oh,
said very few.
very few. Okay. Sorry, guys. Yes, very few, if not almost none. Okay. Very few know where their money is invested. Now, if their money is being invested somewhere, right? Where do you think it's being invested? Anyone want to take a guess?
GIC.
GIC. Yes, guaranteed investment certificate, which is a very low-bearing investment instrument. Okay, it can generate maybe 1 or 2 or 3 or 4%. During COVID, it was a higher rate because of the high interest rates environment we were in. But oftentimes, it's such a low rate of return. Holy crap, people are stuck in this. Inflation is beating the GIC rates. Can you believe that? Right? What do you guys think right now? Let me ask you another question. Do you guys think cost of living is up or down right now? What do you guys think?
It's up.
Anyone here? It's up. Grocery prices are up. Gas prices are up, right? Everything is going up. You go to the gas pump and you're like, holy crap, maybe I should pump tomorrow, right? Maybe I should check from my window, the telescope to see if the prices went down on the gas, board, right? Right? It's crazy. So people are struggling, and imagine having your investments not working for you, sitting in a vehicle or investment instrument that's generating nothing. So this is where we come in handy, guys. We should collect statements. See, when I'm sitting down with a client tells me, hey, Dinesh, I got an RSP, I'll do it with RBC Bank or TD, wherever it is. I said, great, that's incredible that you got one going for you. Where are you invested? Well, it's invested in an RSP. No, well, okay. Well, the RSP is an account, Sally. Well, you can actually be invested in a type of investment. Could be a GIC, mutual fund. Do you know where you're sitting? No, not really. I never looked into that. You know what? Let me help you understand it. There's no charge. Let me sit down. Let's look over your portfolio and see how it's working for you. That's how I collect statements, right? So it's not a hard job, guys. Like when you're sitting down with clients, you ask key questions to see if they understand what they're doing. And if they don't know, you can give them good advice, give them good recommendations by analyzing what they have. Okay. So try that next time. When someone says, I already have it, we'll say, great, good job. And then go from asking what do they have and where's it being invested? And that gives you a leeway to kind of collect some documents to help them review it. Okay. Over 24 million Canadians have unused contribution room. Oof. Can you imagine? Right? Art, I'll take your question. And the next point is Canadians have over 1 trillion in RSP contribution room. And this equates to approximately 41,000 in unused contribution room on average per tax filer. People have tons of room. People are not investing, right? They're not taking advantage of the tax deductions, right? Now, not everyone needs to go into an RSP, but I think it can still be something they can start, even if it's a small monthly pack, $50 or $100, because they're not going to max it out anytime soon. A lot of them have more than tens of thousands of dollars available, right? So RSP is a great way to start a conversation, guys, especially during this period of the season. All right, Artie, I'll take your question.
So it's a bit off topic, not really off topic. So a lira, if we have people who have like pension plans where they haven't collected their money, it would go into a lira. But would the lira give them tax credits or no?
Yeah, so it's a good question. So a locked-in retirement account that is offered through an employer plan, right? And oftentimes that plan is not portable, right? Because it's with the employer. The only time that can be ported out is when they are retiring or if they're exiting the company. And those Lira accounts can now be shifted. So one situation I had, I'll give you my personal example. I had a friend of mine who used to work for this company called Shaw Direct. Okay, it's a telecommunication company, right? Satellite and all that stuff. And they used to have a branch here in Quebec, and then they shut it down. They all went west, and they started now running it from the west side. So what happened was all my friend and all his employees lost their jobs, right? They got laid off. So my friend was the first one to reach out and say, "Look, Dinesh, I got this RSP money or Lira account, whatever they call it." That's how he was talking to me this way, right? And he's like, "Hey, can I do anything with it? Because they're asking me, they're giving me a couple of months here, and they're telling me, hey, they want to move it to Sun Life or I can move it out. What should I do?" I say, "Hey, buddy, give me your statement. Let's look at it and let me help you with that." Right. And what we did, we moved that over. So it was because they got laid off, I was able to move that over. But here's the kicker. Okay, check this out. This is the kicker. He told me his whole department got laid off. Whole department got laid off. So guess what? I was thinking, I'm like, well, buddy, that means it's not just you. You must have 15, 20 people in your department, right? I say, hey, do you think any of your friends would need some of my advice? And that's where I was able to pick up two or three more contracts or investments. It was incredible, guys. So it's not a good situation for that individual. It's a layoff, but at the end of the day, hey, that money needs to be taken care of by someone else. So in those instances, RFP, yes, a lira can be transferred over only when it's a layoff or if they're retiring or leaving. But it is, yes, it's a retirement account that does give you a tax deduction, right? When it comes to your income taxes. So when the employer's contributing in there, it might be a defined contribution plan. For the people that don't know what that is, that's when you actually contribute a percentage out of your paycheck and the employer matches that, right? And that goes into the lira, which will create a tax deduction as well. Okay. Does that help, Arthi?
Yeah, it does. Thanks.
Okay, excellent, guys. So just think of this number. Like, when I saw the stats, I was like, holy crap, there's so many people out there that haven't started an RSP or even used it or even close to maxing it out, right? Like, imagine you can start that conversation for them, right? Hey, let me help you set up a disciplined amount that you can put aside for your long-term retirement. It's incredible. Okay. Plan for today for your clients. Plan today for your clients tomorrow. Okay. RSP loans. Now, this is a subject that I want to cover today, guys. This is going to be an incredible subject. Some of you guys are going to be blown away if you're on camera and actually listening to what I'm saying right here. But this is an incredible, incredible strategy. Okay. So why do an RSP loan? What is an RSP loan? Well, an RSP loan, think of it this way. I don't have the money to put in my RSP today. Okay. And I'm like, man, but I need the tax deduction because, man, I'm going to pay a big tax, man. Like, it sucks. What can I do? I don't got money, but I got good credit. I'm making a decent income. What can I do? Well, you can do an RSP loan, right? You can borrow this money from one of our accredited lenders. We call them B2B bank. And you can invest this money in the RSP, and now you make a payment for the loan and capital back to them. But guess what happens when you do this lump sum deposit? It creates a tax deduction. Boom. And you're saving on taxes. And now it's going to trigger a refund. Even though you're paying a monthly payment back, it allowed you to benefit from the refund so you can offset any taxes you owe for last year's earned income. Guys, it's an incredible strategy. We'll look at it, okay, in more detail. So a couple of points to remember. It's going to help achieve retirement goals faster, okay? With an RSP loan, clients can invest a greater amount. So upfront, so for investments will grow more rapidly, right? So you'll get more compounded return. So instead of me putting $100 a month, which is a great start, don't get me wrong, but imagine I can use $100 as a loan payment, but I'm getting $10,000 that they're lending me to invest today in the markets. That's gonna probably yield me 8, 10, 12%, right? So I'm leveraging the banks. Guys, imagine this. We've been leveraged all our lives, right? By the banks. We leave our money at the bank, the checking account, the saving account. Guess what the bank's doing? They're lending it back to us. They're giving it to us in forms of credit cards. They're giving it to us in form of mortgages, line of credit. They're charging what? 19, 10, 4, 5, 6%, and making a guaranteed rate of return. We borrow money. Sorry, guys. Someone is unmuted. I'm going to make Arti, or hold on one second here. Harpreet, you're on the call, I hope, buddy. Or Kaylee. Give me one second here. If one of you guys can zap people that are talking in between, please, when you come in, guys, do mute yourself. It is quite disruptive when you do that. Okay. I'm gonna make you guys co-hosts here. Okay. All right. So going back to what I was saying is, taking your $100 now and now paying a loan that you borrow a larger amount and you invest today, and you have that larger amount start with work for you, right? So that's an incredible point, number one. Number two, you get to maximize your unused contribution room, right? So if you had like so much room and you're like, man, I don't know when I'm going to maximize this because I don't have the money right now, but you're leveraging the bank. So every time you get a loan, now you got a larger amount, okay? Larger tax deductible contributions. Putting a larger amount creates a larger tax deduction, and you're going to get a bigger refund. Okay. And we're going to show you something called the gross up method. Oh my God. When I saw this, I was like, I remember hearing about it like a couple of years ago, and I was like, holy crap. Like, why didn't I think about talking about it more often? It's such a great strategy. I'm going to talk about the gross up method. You're going to love. Do not leave. Okay. There's 17 of you on the call. Do not leave. Take advantage of the available child education savings grant. Imagine this. RSP loan can be funded towards an RESP. Wow. I didn't know that. So if I qualify for an RSP loan, I can jump and drop that into my RESP, which will in return give me access to the government grants. Right? A lot of you guys know there's the CESG, right? A Canadian Educational Savings Grant, right? And then there's also the QC, which is QESI. If you're in Quebec, you got the Quebec Educational Incentive I think program or something like that. But you get 10% from Quebec and you got 20% from federal, right? Imagine being able to leverage now your RSP loan to benefit from your child's RESP plan, right? And you're gonna get the grants there. So, guys, there's some pretty cool strategies here. So let's move on. So here's the benefit with B2B. So one of the lenders we work with, they're called B2B Bank. Okay, it's a subsidiary of Laurentian Bank. You're gonna see the symbol, and you're gonna be like, oh, I think it's Laurentian. Well, it's a subsidiary, right? They work under them. They're a separate entity, and they are specializing in lending. So when you deal with B2B Bank, they're a virtual bank. They offer mortgages, they offer loans, they have their own credit cards, they have their own debit card and all that, but they're a virtual bank, very similar to Tangerine. I don't know if you guys know Tangerine or Neo Financial. So they're a virtual bank, and they're great at lending for RSPs. Okay, for RSP money, RSP loan. So the minimum amount anyone can get is 2,500. Okay, there's no maximum amount. Now, if you want to get more, you want to get a lot, there is criteria you have to always think about, and there is guidelines, and we can talk about it case by case. The term to pay back the loan can go up to 10 years. Now, you might say, man, that's a long term, Dinesh. Well, guess what? The payments are going to be a lot more affordable. And here's the other big kicker. It's an open loan. So let's say, if I can get 10,000 or 15,000 invested today, but it's only going to cost me about $80 a month, right? Because I'm on a 10-year amortization. But if I get a big lump sum check or a commission check, because you guys are working with Experian, start making big money, you can pay down that loan quicker, so you don't have to worry about all that interest you're going to pay in the 10-year period. Okay, so that's something to think about. So it's one of the longest terms you can get, and it keeps the cash flow intact, so you're not stressed. Oh man, $15,000 loan, I got to pay $400, $500, $600 a month. No, it's maybe about 80 to 100, $150 a month. And we can look at some numbers, guys. Okay, we're gonna do some calculations. Simplified pricing, rates based on the term selected. Right now the interest rates are getting a little bit better. Bank of Canada has dropped, a couple of basis points, right? 25, 50. That's why you see a lot of people in the mortgage industry talking a lot now. They want people to commit to buy houses, and they're like talking about how the rates are going down. So this is the world we live in, right? You got to keep up. Variable and fixed interest rate options are there. So if the Bank of Canada raises the rates, then of course your payments will change. If you go with the fixed rate option, then your payments will stay fixed. I recommend the variable. It's just been proven. I know a lot of people don't like variable, but it's been proven. If you look at any 5-year average, you actually end up paying less interest than on a fixed rate because of how the economy functions, goes ups and down. Okay. Recalculate payments, you can do that. So let's say if you are on a variable rate, which is pretty interesting, is that if the rates go down, you can actually ask them to recalculate the payment so you can lower your payment. So for instance, let's say you were paying $100 a month for this loan, and all of a sudden, Bank of Canada brings it down, then you can say, you know what, I want to recalculate this payment and I want to be able to pay less. So they'll say, okay, now you can pay $90 because the rate went down. Okay, a month. So that's a pretty cool feature. Payment frequencies, right? You have first and the 28th of the month. There is fees except for $50 return the item fee. There are no fees associated with B2B bank RRSP loan and no penalties. Okay, Arti, go ahead.
Like what you just said, where they can recalculate it if it goes down if you're on a variable, is on a monthly basis. So, like for example, like right now with the tariff talks and everything, it might go up just to to compensate for inflation and whatnot. If it does happen, is that on a monthly basis? Can we ask could the client ask on a monthly basis, or is that more of like a once a year kind of change?
Yeah. Good option. Good question. So the way it works, okay, so there's two options, and I'm probably jumping the gun here, but to answer your question, you can ask them every quarter to adjust the rate, adjust the payment. So it's not on a monthly basis. So that's right. So it is on a quarterly basis. However, the other side to this is, from what I found out, let's say you have a $10,000 loan, the payments are $100 a month, okay, and there's no changes in the interest rate, and all of a sudden you were able to get a lump sum of $2,000 and you drop it into the loan. So now it goes from 10,000 to 8,000. Now when you do a lump sum deposit like that, now you can ask them to immediately to adjust the payments instead of having to wait quarterly. Does that make sense? Yes.
Yeah, it does. But I thought there's a limit. Like you can't put in too much from what their limit is, right? Like say like I get like a nice ass bonus from here and I put in a down of like 10K, like a lump sum. I'm not allowed to, because
Good.
there's a sort of threshold of how much you can put. That's what
No.
the one. No?
No, not at all. The nice thing about this feature, that's what I really love, right? And I'm happy you're asking that question. It is an open loan and it has no limit. You can get a $10,000 check today and pay off the loan today and close the account. That's why it's so incredible. Okay. So now think about, I'm probably opening up ideas for you guys. They're like, holy crap. I mean, this is so flexible. That's why I like the 10-year term, because I'm keeping the payment so low per month, making sure I'm not, tight on cash flow to pay back this loan. But yet I have the option, especially you guys, right? You guys are commissioned. Some of you have full-time jobs. Imagine you have that one big month, you make a 10 grand paycheck. You're like, holy shit, boom, 5 grand paid off, right? So those are the nice things, the features about this RSP loan with B2B Bank. Okay, it's an open loan. Good. We'll get back to it. Any other questions before I move on to the next section? Let's see here. We have someone. Who do you recommend RSP loan? IA or B2B Bank? Okay, so Raphael, IA is a great company. Don't get me wrong, and they have a really seamless process for RSP loans. B2B is also another great option whenever you're dealing with any other provider, because when you're doing an RSP loan with IA, you can only invest in IA. You cannot go outside of IA. It's an internal loan program. But when you're going with B2B Bank, you can actually use the money to invest in Beneva. You can go to Assumption Life. You can go to Empire Life. So you have more flexibility. And some of you guys like the Beneva platform because it's seamless today, right? The online platform, they have great funds. Their MERs are low, right? So incredible. So that's why I would consider B2B Bank if you are working with other providers. Arti.
Sorry, I'm bombarding you with questions today. Do you have to be approved for the loan, or can you, if you have a bad credit, can you get it? I don't know if you answered that. Sorry if I missed it.
That's the next section. It's coming up. All right. Any other questions before the next section? Any of you guys are liking this information right here? How many of you guys are excited now? I hope you are. I am.
Me.
Yeah?
Yeah.
Raphael's excited. Great. Shantashini is excited. Anyone else
Yeah, I got a
learning on
question.
this call except those three?
I got a
Yes,
question.
good.
Yes.
Just want to see if you're alive. Awesome. Let's go. So RSP loans. Here we go. Here we go. The 4 C's. I want you guys to take this home, memorize it, take a screenshot, because this is going to apply to you and for the rest of your life and your client's life. Okay. The 4 C's: maintaining good credit, establishing good credit. Guys, without credit in Canada, North America, you are not going to be able to build wealth. Okay. I'll tell you right now, being very frank with you, you cannot build wealth without good credit. Okay. You have to have a good credit bureau, a clean credit bureau. You got to be on point. And you guys know why am I saying that? Because to qualify for a home, which is probably going to be your largest asset, you can't qualify if you don't have good credit, right? So let's talk about the 4 C's. So once again, Shini, Arti, I'm giving you guys some ideas here on what you guys can include probably on a future presentation. But these are the 4 things any lender is going to look at. Okay. 4 things, and we're going to get into details. Number one is the capacity. So you're my client. Sally's my client today. I need to know if you qualify in these 4 areas. Number one, capacity. Measure the ability to repay back debt by calculating monthly loan payments with their gross monthly income. Here's how it works. Your total debt servicing ratio, it's called TDSR. Okay, what does that mean? It is the amount of monthly obligations that you have towards debt. So let's say your line of credit, your car loan payment, your mortgage payment, right? All of that, just those payments. We're not talking about your other expenses like household groceries and all that. We're talking about money you owe to banks or creditors, right? The TDSR says if you take your monthly gross income, so let's say if someone's making 10 grand a month, and let's assume that your obligations for your minimum payment on the credit card. So the way you calculate that is you can look at your statement, or you can technically take 5% of whatever balance you owe. So let's say you had one credit card and you say, it's 5% of that. It's anywhere between 3 to 5% is what the minimum payment is, but I like to use a higher number, 5%. 5% of $10,000. What's 5% of $10,000? Anyone know? It's $500, right? Am I right? 5% of $10,000 is $500. Good. So $500. Am I saying this right? I think I'm right. Yeah, 10% is 1,000. 500. Yeah, $500. $500. Right. And now let's look at if you have other obligations. Let's say you have a car loan payment for $500. That's another 500. So that's 1,000 now. And let's say you have a mortgage payment for $3,000. Now you're at what? 5,000. So here's the problem. If you take 5,000 divided by your $10,000 gross income, what's my ratio? Anyone do 5,000 divided by 10,000? What is that? It's not rocket science.
50%. 50%.
50%. You're not going to be qualified for the loan. You have too much debt obligations over the expected ratio. The ratio has to be less than 40%. Okay. And here's the other kicker. The fact that you have to also include this loan payment that you're going to qualify, that has to also be taken into consideration. So let's say the loan payment you already know it's going to be for RSPs. Let's say for this RSP loan, it's going to be $200 a month. That means you have to already include $5,200 and then divided by your income, your gross income, which is going to be 52%, right? So it's too high. Too high. You got to make sure that the client's in a position where their debt obligation is less than 40%. Okay. So the ratio has to be less than 40%. That's how you calculate it. Okay. So that's number one. And guys, this is not just for RSP loans. I'm going to tell you right now, this is going to be for your mortgage qualification. This is going to be for your car loan qualifications. So whenever you're sitting down with a client, you guys can do this for your client because guess what? You're going to do a proper EFA. You're going to do a budgeting for them. You know exactly how much debt they have. Now you can already have an idea of their TDSR. So whenever you're looking at a client's picture, you can already see if this client is going to be a candidate for an RSP loan or not, right? So that EFA is so key. Number two, capital, also known as the net worth, which demonstrates the ability to manage finances, accumulate assets while repaying debt. This is the amount of liabilities and assets. So if I have, let's say, for instance, a $10,000 savings account, right? I have something in savings for 10,000 and I have, let's say, $5,000 of credit card debt. And that's all, that's my debt. So what does that mean? $10,000 minus my 5,000. I'm eligible for a $5,000 max loan. Okay. So what you need to have on the side, on top of having the capacity, is also your net worth has to be equal to the amount you're borrowing. Okay. So if my net worth is $10,000, then I can go up to $10,000 to borrow an RSP loan, right? Because in the bank side, it's like, hey, if you default, we got something to grab, right? You got something we can grab. That's security for them. So that's capital. Credit history, okay? Credit Bureau Beacon score, right? And the Beacon score, they didn't mention it here. I made a phone call, has to be anywhere above 625. Between 625 and 725, you're in the okay range. They're going to consider you, but they're going to want to make sure that these things are really on point. Okay. They might approve. But if you're above 725, as long as everything else is good, you're going to be instantly approved. 725. Some of you guys are like, oh man, some of my clients are not at that level. Well, guess what? It's your job to help them build that credit. Guys, we're not just here selling insurance. We're not just here selling, we're helping people build their financial futures, when it comes to their net worth. So that requires them to have good credit, requires them to have savings, requires them to have a lot of things. Okay. So length of credit history, that's another thing. How long do they have the credit history for? Are they a newcomer that just landed 6 months, 12 months, just got a credit history, right? Just got one credit card going for themselves. That's also something they're going to look at. Debt of credit information, right? How much credit do they have, right? How many credit cards? Delinquency history, right? Are they missing payments, right? Those things are no good. When you have missed payments, oof, that's right away a red flag. Okay. The other thing they also look at is your utilization rate, okay, which is right here. The utilization rate means that if I have a $10,000 credit card, am I using $9,000 of that, which is 90% utilization? What they want to see on the utilization rate, guys, also is less than 40%. So if you have a $10,000 outstanding credit, right? Sorry, $10,000 credit card, you shouldn't have more than $4,000 on a given month on it. Okay. Here's another strategy. You guys are ready? This is a tip I'm going to give you on how to, make sure your utilization actually gets more freed up. You know how you do that? So let's say you had a $10,000 credit card today, right? And your balance is $6,000. Okay. So you're on a 60% utilization rate. You know what you can do? You can actually, if you're in good standing with your credit, you have capital, likelihood you can get approved maybe for another credit card. And let's assume now you get approved for a $5,000 credit card with another creditor, right? So that means now you got $15,000, okay? $15,000. And now you have $6,000 owing. So now what happened is your utilization, right, went down because now they look at all the credit cards that you have and then they look at what's utilized in total. So that's another way by increasing credit from another creditor that can also decrease your utilization. Okay, so think of that, guy. These are little strategies you want to think about when you're talking to your client, because sometimes your client might be like kind of stuck and not know how to get to the next level. And these are some tips you want to show. Character. Assess the character of an applicant based on a number of factors, including the stability of their career, their residence, and their willingness to provide complete, accurate information. On the credit bureau, you should make sure, okay, guys, take it seriously. If you guys don't know Equifax or TransUnion, those are the two credit bureaus most creditors, if not all banks, right? Most banks report to one or the other. Okay. You got to make sure your credit bureau is on point. If you got to make sure that they got the proper occupation on the credit bureau, they got the most up-to-date address, they got your income, right? And if your income is low showing on the credit bureau, that also can affect why you're not getting approved. You might have got a raise, you might have moved up a new job, right? And for the longest time, it's still showing your old job, your old income, right? Those are factors that affect why you're not getting approved. How long have you stayed in a job? That's another thing that also determines your character, because your character means, are you constantly changing jobs, right? Are you constantly being laid off? You have high turnover, like that means you have no stability. That's scary for the creditor. Like if I give you a credit and you stay at a job for 2 months and you leave next like third month, then we know you can't pay us back, right? So that's another thing, is how loyal are you for a specific company? How long have you worked for a firm? Your address. If you're constantly changing address, that's also a red flag, right? They might say, man, this person probably can't afford the rent. right? They're constantly moving around different, postal codes, right? They can tell by postal code, like what type of neighborhood you're in, right? They can Google your address. You're in an apartment building, right? Or you're living in a house or duplex, and then all of a sudden you're back into an apartment building. Like, guys, these are all things credit bureau can tell. Okay. Super important. Your occupation. Were you working at McDonald's? Is this still showing that you're at McDonald's, or are you working somewhere else now? Right? Telecommunications at a higher level. Guys, monitor your credit. I have a subscription on a monthly basis. Some people say, man, that's a cost, Dinesh. Why would I? No, it's an investment for me. It's 29 bucks, 30 bucks a month, guys. And I make sure every month I monitor my credit with Equifax directly. Some of you guys are going to tell me, well, Dinesh, have you heard of Credit Karma? Have you heard of Borrowell? Yeah, those are great, but those are free and also are not up to date as good as Equifax directly through the source. Okay. And I'll tell you that, because I did a lot of research and I know what Equifax is the source. When you're doing Borrowell is providing you Equifax data, but it's not giving you the most accurate. It's not up to date. It's not quick enough. So if you're gonna spend some money, I would say spend some money on your credit because it's useful for you to build wealth for the long term. Okay. Any questions on this? Was this good? Give me a thumbs up in the chat box if this was good, or say yes. Good. Some of you?
Good.
Awesome.
Good.
All right, guys. Let's move on. PAC versus loan payment. PAC versus loan payment. You can pay monthly into your RRSP, or you can use $200 to borrow money and that you can invest and put into your RRSP. Okay, let me repeat that again. Listen carefully. You could pay $200 monthly into your RRSP, or I can take $200, the exact budget, and borrow $14,852.75. Now, this is an example based on an interest rate at that time. It's an older example, but we can find out what $200 can borrow you today, right? Over a 10-year period. Now, what is going to generate better long term? Well, are you going to pay $200 per month into your RSP? That's going to give you $2,400. Yeah, you're going to get a rate of return, all that. But what about here? You got $14,852 working for you right now, invested in the markets, growing maybe at 7, 8, 10, 12% long term. You're also going to generate a higher refund. Oof. Right? Depending on your marginal tax rate. Your refunds are always based on your marginal tax rate. If you guys don't know what that is, that's the highest bracket you hit when you're making an income. Okay. These are all things you guys as financial security advisors in Quebec. If you're rest of Canada, you can't call yourself a financial security advisor. It's some issues with the regulators. You can call yourself a financial agent, right? Or an insurance and investment professional. You can say that, right? So here, you guys are making sure that everyone is clear about not just what they have for insurance or investments, but understand some of these basic ideas about what is a marginal tax rate, right? What am I doing? I'm earning an income. I need to know what my marginal tax rate is, right? So this is based on a 35% marginal tax rate. Okay. So here's something that we're going to show you. It's called the gross up method. This is what I'm super excited about. Okay. I'm super excited about this right here. Client has $10,000 in contributions for tax year. Okay. So what this meant was last year, let's assume this client, Sally, right, put $10,000. They've already invested out of their own pocket. Maybe they're paying like $700, $800 a month, right, into their RSPs. And at the end of the year, they accumulated $10,000. Okay. Check this out. They're at a 40% marginal tax rate. So we know that they're probably at a higher tax rate. They're probably one of the higher income earners. And this is really useful. This gross up method, it's not for everyone, but it's really useful for the higher income earners. Okay. So listen to this. They're at a 40% marginal tax rate. Okay. So if they put $10,000 in, then what's going to happen is it's going to yield a $4,000 refund, right? Because we know it's a 40% marginal tax rate. Your refund is based on your marginal tax rate. However, let's try this strategy here. Let's take 4,000, okay? And I want you guys to do this formula here. You want to take 1 minus 40%. So 4,000 divided by 1 minus 40% is going to give you an amount. Okay, that's the formula. Okay, 4,000 divided by 1 minus 40%. You want to write that down, or doesn't have to be 4,000, but it can be whatever amount that you can invest. Okay, so if you knew that 4,000 was going to be the refund, you're going to use the $4,000, right? 1 minus that is going to give you $6,667 as a loan amount. So this is the amount that now, instead of exercising your $4,000 refund, you're going to go and get a $6,667 loan from a B2B bank. Soon as you get that, you're gonna now have invested. So let's say $10,000 was contributed last year, right? From January 2024 to December 2024. And this first 2 months, January and February, you go get yourself a $6,667 refund. Why exactly that amount? Because based on the formula, right? We use the formula based on the 40% of the last year's contribution. So we're using 4,000, 6,667 is the one amount you need. You add these together, that's 16,667. Now get 40% refund on that. Now that means you're going to get a check back for 6,667 and you're going to pay off your loan right away because it's an open loan. You just got an extra $6,667 and you don't even have no more loans outstanding anymore. Can you guys imagine the strategy? You just took advantage of the bank. The bank pretty much lent you the money, which you paid off because of the refund you're going to get. And now you got $16,667 working for you. This is called the gross up method. Once again, this is useful for people that are in a higher marginal tax rate because they're going to get a larger refund, right? Any questions on this, guys? Does everyone understand the strategy that I just shared here? Any questions? Harpreet.
Yes, sir. Nice strategy, brother. First of all, thank you so much. Yeah, man. In this one, my question is actually, so what I understand is $10,000, right? We invest in the year, right? And then we also get a loan of 667, right? And then we add up, and with the RRSP, we're gonna get a refund of 6,667 from the government.
Yes.
And then we are paying the loan back with that same amount.
Exactly. Incredible, right?
Awesome.
What a strategy, guys.
Sure.
Harpreet picked it up. Shantoshini,
Thank you.
I see another excited individual here. You know what I just realized? The analytical individuals put their hand up. Go ahead, Shantoshini.
Hi, Dinesh. It's Aya from
Yes.
Santoshini's computer.
Oh yeah, go ahead. Sorry, I can't
Yeah.
see you. Yeah.
Okay, so would the marginal tax rates change according to the province? Because Quebec takes more, right? So
Yes. So you're gonna know, right? Based on the income earned for that given year and employment, right? As an employee, you're gonna know if you earn 80,000 or 90,000 a year, you're gonna know what your marginal tax rate is. So that's the rate that you're gonna use to base the amount of refund you would expect if you were to just do the 10,000. So now you'd say, so let's say, so in this case, it's the example here, right? So we know that this person is going to be at a 40% marginal tax rate. So all they did was, okay, so I know that I would be able to get a $4,000, right, refund. But instead of getting $4,000, let's do the formula. Let's take $4,000 divided by 1 minus 40%. Let's now get rather a 6,667 loan, right? And now I have $16,667 invested, which will return me a 40% refund, which is gonna equal to the loan I borrowed. Does that make sense?
yeah, that's okay. Yeah, thanks.
Yeah.
Yeah.
And this is an incredible strategy. What I showed right here, people do not know about this, especially on the RSP subject matter that you guys, especially Sheeny, I'm shouting out names because I know you guys do it. But if you could share this strategy, people will be pretty impressed, right? Imagine being able to take that money. Now, the refund, okay, here's the only, you're not going to lose much money because the refund might come in a few months later, right? Once you file your taxes. So you might have paid maybe 1 or 2 months of interest, right? But yet you're still getting back a larger amount back, which is going to go all into your RSP, right? Which is great. So there's no loss, okay, long term, which is incredible, okay? So here we go. Last thing, how is this going to benefit you guys? Agents, this is going to build your assets under management. See, I'm getting excited about this, just teaching this. Like, man, I got to get better at this RSP game, right? It's first of all, how does it help your clients, right? And help you, the agent. Number one, it creates accountability and strengthens your relationship by having to meet your clients 2 to 3 times yearly. Why? Because when you got investments going for your clients, it's not like life insurance. You sell them once, you don't talk to them for the next year. Investments, it would be ideal if you're doing an investment with them, review it with them 2 to 3 times a year. Talk about their rate of return, talk about the funds, right? And how do you talk to them about the funds? Well, talk to your product partner first. Hey, I have a couple of clients in this type of fund. What should I say about the markets before I go meet them for my follow-up review? Oh, yeah, the markets are going to go great because the fund is doing great, blah, blah, blah. So now I'm going back with some info, right? And I'm talking about the people that don't read the markets all day long. Talk to the product partner, right? And go back with some info to touch base with them. So you're keeping them accountable. You're keeping them, their relationship strong. Your client's going to respect you because which bank does that? Which bank calls the client and says, hey, let's talk about your investment? No, none. That's your value proposition, guys, the accountability. I was talking to an agent today and I say, guys, do not undermine or undervalue what you do, right? Banks don't do what we do. Banks do not call their agents when markets are going down. Banks will want you to just put money in their in their own shareholders' pocket, but not for you, right? So imagine the value you can provide. Consistent flow of contributions, monthly packs, lump sum deposits builds higher trailer income for you. Income which is stable and growing. It's stable and growing. This is I'm super excited to show you guys this. Okay, guys, if you are having challenges today to open up conversation, a simple conversation can be, hey, let's help you start saving money. People want to save money more than ever today. Coming out of this holiday season, especially December, people are struggling. They took 2-3 weeks off. People thought that was a vacation, but they're coming over to a nightmare because they got bills piling up and they can't keep up with the bills, right? So they need to start saving money for emergency funds, putting money for RSPs. Guys, saving money conversation is probably the easiest conversation you can have. If you can start disciplining people, $50, $100, $100 pack. Here we go. Let's look at what that can relate to for you guys. Here's an example of how fast you can generate consistent income. Can we help someone save $100 a month in an RSP? Anyone here? Do you think you can help someone save $100 a month in an RSP account? Yes?
Yes, sir.
Am I the only one?
Yeah, of course, we can do that.
Yes? Yeah, I think every life insurance client, you should be able to have that conversation, right? 5 new clients a month. Let's say you made it a target. Every month, you're going to go help 5 new people put away $100 a month into their RSP. By year 1, right, if you do 5 times 12, that's 60 clients contributing $100 a month. Let's do the math. If you guys are doing the Beneva, okay, it's called the Beneva CB3, chargeback 3 option, every month, you're going to start building a residual income. That's very little, okay? Very little. First year, though. As an SFA, that'll be $123.75. Some of us who complain about the back office fee, man, that $39, can't stand it. Man, my E&O fee. Your E&O and your back office will be covered if you decide to do it just once the first year. Guess what's going to happen? Second year, you do it again. Now you got 120 clients. This doubles. Then you do it again. Triples. Guys, you can quickly start building $500, $600, $700, $800 monthly. And we're talking about just 5 clients a month. Some clients are going to put away $200 a month, $500 a month, $1,000 a month. I got a client doing $1,000 a month. I got a client doing $1,500 a month, right? You got higher income earning clients who are disciplined to say, you know what? I'm not touching this money. I'm putting this money aside. Can you imagine how big of a portfolio you can build? And on top of it, this is not even with the growth. If this money grows, right, 10%, 12%, we're talking about making money off that growth as well, right? Because you get a trailer income on that. Guys, how many of you guys are excited to go help clients now save money for their retirement? Am I the only one? Anyone here? Anyone else here? Let's see your faces. Come on. Yeah? Guys, this is incredible. Guys, like people would have to work so hard, right, to have a source of passive income. Can you imagine this? Right? This is just the first year. Imagine you do this 5 years in a row. You just said, you know what? I'm not going to sell life insurance. I'm not going to sell disability insurance. I'm not going to do anything else. I'm just going to find 5 people that want to save money for their retirement. $100 a month. 5 years down the road, you know what your monthly residuals are going to be? Right? $500, $600, $700, $800 a month. $500, $600, $700, $800 a month. Guys, right? Tell me which pension plan can pay you that right now in the next 5 years. Just on your personal book. Guys, I'm freaking pumped. Guys, we should be helping so many clients out there. Should be helping so many clients out there. We're not having these conversations. And this is besides the RSP loan conversation. This is like the $100 a month. If we did start doing the $100 now gets me borrows $5,000, imagine that now, right? It's going to explode, okay? So let me step out of this. Was that good information? Someone make some noise or something. I need some energy from you guys.
Yes, sir. 100%.
Yeah.
Excellent. This is going to be recorded it's recorded. So I encourage you guys, if I was sitting in your shoes, Let me tell you what I would do. Listen to me. Listen. If I was sitting in your shoes right now, I would go back to this recording after. I would take the recording seriously. I'd probably watch it 2 or 3 times. When I started in this career, I told myself, I can't learn everything in one sitting. I have to sit down and review this 2, 3 times so I can really grasp the idea, the concept, so I can really go help families. That's what I would do if I was in your shoes. Okay, that's just a word of advice. Let's jump over to the website. We have a few more minutes here, and I want to show you the B2B Bank website of very useful tools. B2B Bank. Okay. By the way, if any of you guys are excited to go get your code with B2B Bank, it's already probably given to you. You just need to know how to activate it. I'll show you how to do it right now. If I go under associate, this is for RSP loans, and the RSP loan process is quite simple, guys. Let me see if I can, I think I erased everything, but I got to now put this in. Give me one second.
But you say it in a way where like things are not.
Give me 1 second, guys. Let me just get my password here. I had it saved, but I had to do a computer cleansing. So guess what? It erased everything. That's why you have to have it all written down, right? Yeah. Always have a backup, guys. Always have a backup. Okay. Save. Don't forget the big event. Today's topic's not on that. If I go under contracts, I go under my contracts. I'm going to scroll down all the way to the bottom. I should have something called B2B, number 31, maybe something else for you, but look for B2B. I already have it approved. Here's my advisor code 3551-2005. If I click this little PDF, okay, I'm going to get more details. And what I'm going to do is I'm going to call this number, if I was you, tomorrow, right here, I'm highlighting it, and get yourself set up on the B2B Bank website for EASE application. It's called EASE, which is for the online RSP loan applications. Okay. You can also do TFSA loans. Oh, wow. Never heard of that. Imagine you can do TFSA loans as well. Pretty cool, right? All the information is here. You just call them up, make sure you get your account set up. Okay. So that's just a quick tutorial there. Let's go back. B2B Bank. I want to show you guys something quickly here. If I click over loans and I click over talk RSP, I found this very interesting. You know, let's say you sat down with someone today and you say, hey, John or Sally, is it possible for you to start putting away maybe $10 a day rather than paying on food that you spend outside? Can you save $10 a day? Well, what about $10 a day, maybe not spending on coffee or maybe shopping, right? And if they can do that, if they actually do $10 a day and they do actually 20 working days, let's say, weekends they go splurge, right? That's going to be $200 a month, right? They found $200 a month now. Now, how are we going to make this work? Well, let's look at the $200 a month, right? And we can look at option 1. The $200 a month is going to allow them to get a $17,732 loan based on today's rate. Okay. I believe it's based on today's rate. No, it might not be. No, it's a little bit higher today. This is just an example that was given, but it would still be close to what this amount is, maybe around 16,000. We'll look at the numbers. Okay. Over 10 years, 6.35. With the savings horizon of 30 years, you can end up with $101,000 and $844 just on that one-time investment, which is going to compound and grow over the next 30 years because you put a lump sum today, right? And let's say you have retirement 30 years ahead of you. What about option 2? If you're super, super keen, well, guess what's going to happen? You're going to invest the $17,732. It's going to generate a refund, right? I told you there's a tax refund. Well, you take that refund if it comes back to you and you don't owe taxes. You reinvest that too. So now you got more money working for you, right? And now you got 142,000 at the end of the same amount of years because you're taking that refund and you're reinvesting it back into your RSP. What an incredible strategy, guys. To help people with just one RSP loan at least get to 100,000, right? $150,000. Imagine. From here, I want you guys to look at the rates. If you want to look at the loan rates, it's all here. The loan rates are right here. You got the B2B RSP loan rates, and you got different amortization periods. And if you're looking at the 10-year period, it's 8.45%. Yes, because prime rate, is still high, and the plus rate is still high on their end because of the longer term. But it's an open loan. It's an open loan, okay? So what am I gonna do here is if I'm doing a 10-year amortization, give me a few more minutes, right? I know we're at 8 o'clock. I'm gonna take that 8.25 and let's do some 8.45 and let's do some math. I'm gonna go under support. I'm gonna click on calculators. Guys, amazing tools on this website, okay? And we're gonna take the RSP TFSA loan calculator. So if someone tells me, anyone want to give me an example? You guys have like a budget. You might say, well, Dinesh, you know what? I want to do an RSP loan. My monthly amount that I can afford to pay, I want to do $150 a month. And I want to do a 10-year payment plan, which is 120 months, right? So if we look at the current table, we said it was going to be 8.45%, which is the variable rate. So if I click calculate, right, the loan amount I can borrow is $12,124 on $150 a month. $12,124 works for me right now. Boom. Now, once again, you got to be able to get approved for the loan, right? And we looked at the 4Cs, so you got to make sure you're mindful of that. Make sure that your client couldn't qualify. But 12,000 rather than $150 being paid just monthly, right now you got 12,000 lump sum working for you. Plus you get the deductions and all of that stuff. Okay, which is pretty interesting. So think about that. You can do it based on budget. Like if I'm doing a $200 amount, right? I can click calculate, and that's going to give me a higher amount. Yes, Sheeny, go ahead.
So for this monthly payment amount, what if a client differs one payment or more than one payment, like a couple of payments?
Okay, here's a nice thing about this program. When you're doing this, you can do a deferral, right? A deferral for 6 months before you start the loan payment. Okay? So it's going to give people ample time to actually save money. Now you're going to owe interest for the first 6 months that you actually were supposed to make payments. So you can defer the first 6 months and start the payment as of the 7th month, but the first payment on the 7th month will include all the deferred loan, or that 6 months of loan payment interest will be amortized over the when the payment plan starts. So what I would do in your case, Shantashini, if someone is tight on budget. By the way, guys, once again, this is case by case. If a client is tight on budget, I'm not going to offer them this. If I have to answer that question, right? If someone said, if you're worried about someone missing a payment, this is not the right client for that. Like you saw the 4Cs, guys. What does it take to be, part of the 4Cs? You got to have good character. You got to have capacity. You got to have this is someone that's on it. Like they're disciplined. They're serious. They're just looking for ways to leverage. They want to grow. Some of you guys on this call can do this. And some of you guys who do it can also teach other clients to do it because, you're going to be a user of the product, right? User of the solution. So yes. So for me, if someone is struggling, I wouldn't really recommend it, but it does still give you that 6-month deferral option, which gives people some leeway to start saving up money. But it's a double-edged sword, right? It depends on who you're recommending it to. Because if you do a 6-month deferral and all of a sudden on the 7th month, they weren't expecting a payment to come in, and then all of a sudden they start missing. So you got to know who your client is, make sure that they're ready for this. Okay. I did take RSP loan. There you go. So Harpreet did. Awesome. So that's how you guys use this. The last thing I'm going to show you is one of my favorite websites. It's ENY Calculator, right? I go to this website, Ernst & Young, one of the big 4 accounting firms, corporate accounting firms in the world, along with KPMG, Deloitte, and I forgot the 4th one, if anyone remembers. But yeah, the big 4 accounting firms. So 2024, we're going to look at the RSP savings calculator and personal tax calculator. Why do I use this? Well, if I go 2024, I'm just going to ask my client, I'm saying, Mr. Miss Client, do you remember how much you earned last year? Well, let's say I earned $75,000. Okay, great. Well, $75,000 tells me in Quebec, you owe $17,439. Is that about right, Mr. Miss Client? Is that how much your year-to-date taxes were deducted? How do you find that out? Well, if I'm talking to a client in this month, February or January, I just got to ask them to look at their last pay stub because they don't have their T4 right now. They might not have it right away. But I can say, hey, look at your last pay stub. Let's look at what your year-to-date tax deductions were, and let's find out if you paid enough taxes. Because if you didn't, right, maybe, right, I'm not your accountant, maybe you might owe taxes. So let's assume the person paid, I don't know, they didn't have enough taxes paid, right, on the employee pay slip, right? Because sometimes, the employer, you can also withhold less taxes. You can also, employer, if you guys want, some employers allow you to increase your withholding tax, like hold back more taxes so you don't worry about paying back taxes later on, right? Now, some people don't want to do that. Like, why would I want to leave more money with the employer, right? I want to use that money. So 17,439. is what you should have paid. Okay, so let's say the person paid, I don't know, 15,000. So they owe 2,439. So what do? I go back here. I say, okay, let's do the RSP savings calculator. I'm going to do 2024. You made a $75,000 income, and we need to get you, maybe enough to cover that 2,439. So we're going to do a $5,000 lump sum. A $5,000 lump sum will give me an $1,800 refund or savings. Well, that's not enough. Maybe $7,000. Okay. I do $7,000. That gives me about 2,500. That's the right amount. So if I invest 7,000, I'm going to get 2,500. That's going to offset the taxes I owe last year. How do I get the $7,000? I don't have it. Well, guess what? We can do an RSP loan. If you qualify, right? Let's look at your 4 C's. Let's make sure you can qualify. Get you to 7,000. I save you on taxes. Now you got 7,000 working for you. Cha-ching. Cha-ching. All right, guys, I'm excited. I'm pumped up right here. I don't know about you guys. Okay. This is an incredible strategy. All right. So that's my mic drop for the night. I hope that helped you guys. Anyone else excited for this strategy right here?
Yes, sir. I just made a video on RRSP and now I'm gonna make it on RRSP loan.
Let's go. Let's go. What about the other
Yeah.
folks on the call? Rapang, Kishan, iPhone 2. Right? Rebel left. There you go. Sunita, you're here on the first call. Was that informative for you? Hopefully it was. I know you're
Yeah, it was.
excellent, guys. So that's the type of content, that's the type of education we're providing, guys. Guys, this is going to elevate your life if you take advantage of some of these. The best way to really talk about this to clients is take some of these concepts seriously for yourself, for your life. Right? Be a user of the financial products and advice that we're giving. Right? If you use it, you would stand more confident in front of your client. You would be able to speak with confidence. Right? So
Definitely eye-opening.
yes, sir. Kishan, go ahead.
No, I was just saying, definitely eye-opening. I'm going to give you a call later because I think I have a referral that I
You cut off there, buddy. Can you say it again?
No, I said definitely eye-opening. I'm going to give you a call later just to discuss it with another referral.
Absolutely, guys. So let's go crush it, guys. 2025 is in a great year. Look, March 3rd is the deadline for RSP. If you guys have anyone in mind right now, including yourself, that might need to benefit from some tax deductions, think about the B2B program. Think about the RSP program, right? Go on a crusade, go on a whatever it is, right? A campaign. I shouldn't say crusade, but campaign. Let's make it happen. March 3rd is the deadline. March 3rd. Now, in order for you to borrow this money, get approved, Rafael, you don't want to wait till March 3rd, February 28th. That's not going to work. That conversation for the RSP loan has to start now because approval process can take a couple of days, right? Depending on if they qualify with all 4 C's. Now, this is what I was told. If they are good on the 4 C's, they got a 725 credit rating, and they want to apply up to $50,000. They're not going to ask for any proof of income or proof of assets. Whatever you put on the sheet, they'll get approved pretty quickly. Now, can they flag some accounts and ask for more information? Proof of income. Proof of income means you got to have to provide notice of assessments from last year's declared income, pay stubs. They're going to probably need proof of assets. If you're claiming that you have this much of savings, they're going to need a statement, right, to show that. So have all that prepared if you're going to go for a higher loan. Okay. If you're 725, if you have an impeccable credit bureau, right, you're going for $5,000-$10,000 loan, it's going to get approved within days, 2-3 days. Okay. It's incredible. All right. I'm excited. So I'm signing off, guys. Watch this recording, become a student of the business. That's the only way you're going to become great. All right. Take care, guys. Have a great night.
Thanks, brother. Thank you so much.